Ladies and gentlemen, good day and welcome to the Talbros Automotive Components Limited Q1 FY26 earnings conference call. As a reminder, all participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Talwar, Joint Managing Director. Thank you, and over to you, sir.
Thank you so much. Good morning, everyone, and a very warm welcome to our Quarter 1 results earnings calls. On the call, I'm joined by Mr. Naveen Juneja, our Director on the board, our Group CFO. Also, we have SGA on the call with us, our IR advisors from Mumbai. The results and the presentation have been uploaded on the stock exchange. Let me begin with the industry overview. In Quarter 1 FY26, the Indian automotive industry recorded a muted performance in the domestic market, with the two-wheelers and the PV segment not doing good, and the tractor segment, along with EV vehicles, have done better in the quarter, but obviously there's a much smaller base. Overall volumes declined by 5.1% year-on-year. The commercial vehicle space, where today Talbros is a large player, saw a muted growth, posting a 1% decline year-on-year in this segment. While price increase by OEMs provided some support, the demand remained soft, particularly in small commercial vehicle categories. Electric vehicles, on the other hand, continue to perform strong during the quarter. The segment's momentum was supported by an increasing consumer acceptance, a broader product availability, and improving charging infrastructure. That said, the pace of growth moderated compared to previous quarters, mainly due to phase reduction of government subsidies, which affected the price competitiveness and the consumer affordability. The two-wheeler and the three-wheeler segment remained subdued, with volumes declining by around 2% YOY. This softness is largely attributed to an ongoing inventory correction by OEMs and weak demand for entry-level bikes, especially those focused on fuel efficiency. Despite the near-term challenges, the industry outlook remains cautiously optimistic, supported by expectation of a strong festive season, above normal monsoons, which could help revive the rural demand. What we have seen and spoken to our OEMs in the domestic sector and export, they say that Quarter 2 will be better than Quarter 1, and Quarter 3 definitely will be far better than the previous quarters. Coming to company performance, in the first quarter of FY26, Talbros delivered a steady and resilient performance, navigating through persistent macroeconomic challenges, a broadly subdued demand environment in the auto sector, and a slowdown in the export activity. Despite these headwinds, the company achieved a marginal 1% year-on-year increase and a total of income from operations reaching 211 crores. This growth, though modest, reflects the company's stable operational execution. EBITDA for the quarter stood at 35 crores, EBITDA margins at 16.5%, which tells you that no matter if the growth goes down, we work a lot on our operational efficiencies and economy of scale and continue to give you good margins. Our exports were strong, so that's a good product mix. So thereby the net profit grew year by year by 8% to 22 crores. The quarter also highlighted the resilience of Talbros' diversified business model. While the forging segment faced a marginal decline due to its export orders and a delay in projects that had to be executed by OEMs worldwide, the company's joint ventures did decently well. Marelli Talbros and Talbros Marugu JV delivered robust EBITDA growth of 30% and 26% respectively, driven by an increased focus on value-added and technology-driven products. On the exports front, Revenue from international markets contributed to 28% of the income for the quarter, showing our consistent effort to increase exports. Within the export mix, the UK accounted for 56%, followed by Europe, excluding UK, at 27%, and the US only at 13%. USA contributes to about 3% of the total revenue. This well-diversified geographical spread over Talbros is a natural hedge against region-specific risks, including the recent tariff-related developments between the US and India. At the moment, we are continually looking to expand our exports to more countries as we speak. TSL continues to maintain a balanced revenue mix across OEMs, aftermarket, and export markets, which again provides a natural hedge. The company secured orders worth 580 crores during the quarter. These orders span across different product categories, geographies, highlighting customers' preference for Talbros' capabilities. While fluctuations in the market will demand continue to pose challenges, Talbros is committed from shifting from pure acquisition-focused efforts to efficient execution. This is crucial to translating our strong order pipeline into a sustained revenue growth. Looking ahead, Talbros remains firmly aligned to its long-term strategy. The company will continue to deepen its relationship with OEMs. We are in discussions with OEMs other than the existing ones in our country to get more business from them, expand our EV component offerings, and at the same time, increase exports as well. That's all from my side. Before I pass on the call to Mr. Juneja, I would like to say that our company is looking at a stronger quarter 2 than quarter 1, and at the same time, quarter 3 seems to be very bullish because a lot of our order books, which have been delayed due to execution by OEMs, will come into burning. Thank you, and I pass on the call to Mr. Juneja.
Thank you, Anuj. Good morning and a warm welcome to all the participants. Let me begin with the financial overview. Total revenue for Q1 FY26 stood at 211 crores as against 209 crores in Q1 of FY25, which is a relatively flattish growth. EBITDA for Q1 FY26 stood at 35 crores as against 35 crores in the last year of Q1 FY25. EBITDA margin stood at 16.5%. PAT for Q1 of FY26 stood at 22 crores as against 22 crores in Q1 of FY25, a growth of 8% on YOY basis. Now coming to the division-wise performance. In the gasket division, in Q1 of FY26, sales for the gasket division stood at 135 crores as against 133 crores of Q1 of FY25, a moderate 2% growth on YOY basis. EBITDA for Q1 of FY26 stood at 22 crores, which is a growth of 5% as compared to the same period of last year. Coming to the forging division, revenue for Q1 of FY26 was 75 crores, which remained little flattish, primarily because of the export demand little subdued in European market, where our major customers are there. EBITDA stood at 13 crores in Q1 of FY26, which is slightly a degrowth as compared to last year. But as Anuj told you, that we will recover this in the second quarter. For Marelli Chassis System Private Limited, revenue for Q1 FY26 stood at 73 crores as against 69 crores, a growth of 6% on YOY basis. EBITDA for Q1 of FY26 stood at 13 crores, a growth of 30% on YOY basis. Now coming to the Talbros Morogoro Rubber Private Limited, revenue for Morogoro Rubber business in Q1 of FY26 was at 30 crores, a slight degrowth as compared to last year because of the delay in launches by Maruti of EV vehicle. And EBITDA stood at 4 crores in Q1 of FY26 as against 3 crores in Q1 of FY25, a growth of 26% on YOY basis. We are dedicated to creating superior value for our customers through high quality products offered at a competitive price. We aim to consistently increase and exceed customer expectations while building trusted long-term relationship with our stakeholders through operational excellence. And this is from our side, and would like to open the floor to question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shikha Mehta from Time and Tide Advisors. Please go ahead.
Hello, sir. Congratulations on a decent set of numbers given the situation. I just had a few things I wanted to understand. I think in Q4 we mentioned that we would see a better FY26 than FY25 because there was a delay of certain orders. Are we still holding good on that guidance?
Yeah, we are still hopeful that irrespective of what has happened in the first quarter and what is happening in US, etc., we are still hopeful that we'll achieve a double-digit growth in this financial year.
So would that be, are we hoping to be closer to 20% or are we expecting?
No, 20%, ma'am. No, I never said 20% in last call also. I said around 15%.
Double digits. Okay.
No. Double-digit growth start from 10% onward, ma'am.
Right. Okay. And secondly, I wanted to understand we've already done a lot to improve our margins to 16.5%. Are we hopeful that we can improve this further, or is this something that can be sustainable for us?
No, ma'am, it will be improved further. When the top line goes up, it will be improved. Definitely. Don't go see first one quarter. Wait for the year. We will deliver good results. I'm quite hopeful at this moment.
Understood. And another thing, sir, I wanted to understand was, like we mentioned, there's been a slight slowdown for a while now in the CV segment, but a lot of reports are suggesting that, the green shoots are starting to be visible in that sector. So do we have any outlook on CV as a segment for us?
So of course, you are right. June was very slow. July was also slow in CV segment, but with the festive season, we can expect some upstick in this CV sector. We are expecting and plus we have new product launches in the CV segment. Of course, it will take care of a better growth for us in the CV segment.
Understood. And lastly, so on the forging side, historically, forging has been a segment of high growth for us. I understand the last few quarters have been a little muted, but how can one look at the whole year and what is our expectation? And if you could also help us understand what has happened because of which we're seeing muted growth.
So, ma'am, first of all, muted growth is because last time I told you that because of the BMW delay, the schedule came down, but now it has been recovering. And every quarter, you can see a better performance on that front. Plus, new products launches which are expected from OE customer have been little delayed by 1 or 2 months. Of course, it will be also be there in this quarter. One or two press got breakdown for 3 weeks, and I think one press got breakdown for 3 weeks, one press got breakdown for 2 weeks, and we lost order of approximately 2 to 3 crores because of that. But we will recover in this quarter. All presses are online now, all recovered. So you can see a better growth as compared to first quarter and second quarter. By the year end, I'm expecting this division should be around 325 crores.
Understood. And in Q2, are we expecting to see year-on-year growth as well? I understand quarter-on-quarter will be better.
The quarter-on-quarter, because last year, first 2 quarters were very good for the company, and last 2 quarters were a little muted. In this year, I think first 2 quarters will match last year, and then we can see a growth in the last 2 quarters because Anuj told in the speech also that new product launches we are expecting in third and fourth quarter.
Third and fourth quarter. Understood.
Don't see last year, see quarter to quarter. Yeah.
Okay. And so lastly, on the export front, I think this quarter we've done 28% of revenues. we've been targeting 35%. So any guidelines on when we can reach that?
Yeah, we are still.
Is it too uncertain?
Yeah, we will. No. US is nothing for us, for our group. For the group,
Right.
it's only 35 crores, 38 crores, nothing. But our new businesses we are getting is mostly in the European segment. The scientist business, which we are talking, is on track. It will start in the third quarter. Plus, we are expecting more business in that division. Export business, I think we will announce within 1 or 2 months of that. So we are quite hopeful that we will be able to touch near to 35%. We are still hopeful. Now we are 28% in this market. Yeah.
Okay. So I think a year back we had mentioned something with Russia as well. Did that materialize, or are we working on that, or is that currently shelved?
No, we are working on that. Not directly Russia, through other country. Not directly.
So
we are working. We are
Be a
working.
new geography for us
It will also start in the third quarter.
Yeah, it will.
Third quarter.
Yeah, it will.
Okay. And other than that, are we currently looking at any new geographies, or this is our plan for the current?
We're expanding Europe. We're trying to expand Europe in a decent way.
Okay, understood. Thank you for answering all my questions, and again, congratulations on the decent job. I'll come back.
Thank you.
Thanks.
Thank you. A reminder to the participants, please press star and 1 to ask a question. The next question is from the line of Vishwanath from Prosperity Wealth Management. Please go ahead.
Hello. Good morning, sir. Am I audible?
Yeah, you are audible. Morning.
Yeah. Thank you for the opportunity. So my first question was, over the last few quarters, the company's revenues have remained range-bound. So while our margins have improved due to operational efficiencies, so do we see this revenue trend primarily because of the subdued market demand, or because of our utilization levels being capped? And are we holding back on our capex because of the market demand as well? Could you clarify on that?
So, okay, but what has happened last 3 quarters, because of some customers have turmoil is happening in the whole world, you know that very well. And Indian market is also not supported from the last, not performed really well. Auto components I'm talking about, auto market has been subdued also. So, but we are quite hopeful, and we have got orders, sufficient orders to take the company forward. Some orders have been, had delayed, that's fine, but now it has started coming into burning. And we are CapEx, there is no stoppage of CapEx. We are in the forging. We have recently ordered a 1,600-ton press, worth 10 crores approximately. We are ordering another 4,000-ton press before this end of this calendar year. So we are orders are in hand, and we are hopeful that whatever the muted growth top line you have seen will improve in future quarters. Definitely you will have a look. From third quarter onward, you will.
Yeah, I would like to add what Naveen mentioned. In our forging business, which we believe in a lot, the whole point of ordering a heavy-duty press like 4,000 is to get larger part numbers, larger value add, larger value with the same OEMs and new OEMs, and they want it from us. And that shows you the commitment that we are putting in this business.
Understood.
All capacity online. Pardon me?
Yeah. So our CapEx plans are as per going as we planned.
Yeah. We are not holding any CapEx.
This is a very short-term phenomenon. Automotive is a cyclical industry. It is not. It goes through these ups and downs. We will see the uptick happening again from quarter 3 will get better. So just a short-term phenomena. It's no cancellation of orders. It's a delay of orders. Like, for example, some of our OEMs in Europe or UK, right? They're launching some EV vehicles. We're doing a lot of work with them. But the car is delayed by 1 year. Now, we've already put in the money. We have to wait. So, a big brand name like Jaguar Land Rover can also get delayed by a year or so. So it's just a matter of time. And as we mentioned to you, we are looking at constantly adding new domestic customers as well as export.
Understood, sir. So, thanks for that clarity. So my second question is regarding Marelli. So we are is the CapEx completed with regard to that? And are we still maintaining the 35-40% growth primarily? And we were also supposed to commence Maruti and Stellantis supply from that. So is that on track as well?
Yeah. To answer your question, CapEx is online. It is being incurred, and some is in the process of being incurred. We are on track of it, and we are expect the supply to be started from the third quarter onwards. We are on track of it. Everything is in line.
Got it. And the last question is with regard to the recent UK FTA. So how will we benefit from that?
So it's too early to comment on that because nobody has understood what is in depth. Sorry, but of course it will be benefit for us if our customers like JLR, etc., and JCB is there. I don't know. I have no clear answer on that. Sorry also.
Okay, sir. Thank you. Thank you for answering all the questions.
Thank you.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Dipen from Six Senses. Please go ahead.
Good morning, Mr. Juneja and Anuj. Thank you for the
Morning, Dipen.
Congrats for a good set of numbers given the circumstances.
Thank you for the support here.
Yeah, congrats on all the new orders which you have got. I just had one question on the margins. Sir, we have increased margins substantially over the last 3 years because of indigenization and cost control. Going ahead, how do you see the margin picture? Like we have said that we should be able to improve margins in the current year also. Without going into numbers, could you just give us some of the levers what you think will lead to either sustaining or improving the margins from the current levels? Thank you so much.
Thank you, Dipen. Of course, our margin we are trying to improve. With the increase in top line, the margin should automatically improve. Plus our focus on the export, we are targeting 35% by the next year end. So I think with that, my margin will improve further because export business has good margins. And thirdly, it's always there. It has a good margin. But risk is also there, but doesn't make a difference to us. So we are hopeful that increase in top line and in change of our product mix and the metal prices are also stable, no more much movements happening. And we are still, our exercise on localization is still on and it's not over. All these things will help me to improve my margin, but not 20%. It can improve by maximum 1% here and there over a period of time.
Okay. Right, sir. And any further comments on your FY27 target of revenues which you had given? We have seen
Sir, revenue target, last time I said it will be delayed by 6 to 9 months, maybe 10, 12 months, because lot of uncertainty, anxiety has happened in the market, I don't know.
Correct.
Which is, both stuff has, I don't know, it creates a confusion in the mind of the investors, including me, wherever I invest. Yeah.
Like I mentioned to you, it is a cyclical industry. We've not lost orders. We're on track. This will come back. We've seen this cycle for so many years now in automotive. So, it's not an issue. And like I told you, we're looking to add more OEMs in domestic market and export market, So if whatever's going now, we are not stopping. We are just adding. So the focus is there. Every division is working on just order acquisition. And
we are not coming down, sir. We are not coming down.
Yes, sir. There is no complaint as such. Just wanted to get a view on
something is not beyond our control. If my OE customer, like Maruti EV has been delayed, a magnet nahi hai. So I can't do anything on that, ma'am. Please. If my customer in UK has delayed his EV launch because uski problem hai components ke andar, I can't do anything on that. But my order, my sample is there, passed, everything is passed. Everything is done. We have received the amount for that dies and tool, everything is there. Now he said, whenever he gives us a green signal, we will start.
Sure.
I mean, it's got delayed for you can't imagine, it's delayed by almost a year and I'm talking to the OEM another 3-4 months delay. So it's something that, it's beyond our control. But what we can do is tell our team, okay, fine, fastest guy on the site, let's look at 5 more customers. Move in that direction.
But it takes some time. It थोड़ा delay हो जाता है हमारा.
Correct.
It's
Correct.
it.
Correct. No, no. Yes, sir. We understand. Completely understand, sir. Thank you so much, sir, and all the very best to you. Thank you.
Thank you, sir.
Thank you.
Thank you. Participants, to ask a question, please press star and one. The next question is from the line of Yash from Equity Tree Capital. Please go ahead.
Yes, sir. Thank you so much for the opportunity. And sir, congratulations on the decent set of numbers. So my
Thank
question
you,
is,
yes.
in the previous call, you had mentioned that the capex cost for FY26 would be 50 CR. So sir, what would be the peak revenue that we can generate from that capacity?
So this capacity, if I do a 50 CR capacity, my forging can do around 350 crores, and my gasket can touch 950 crores I can do.
Got it, sir.
Peak.
Okay.
But peak never happens because some business comes in, we don't work on peak, we work on 85% of that, which should be achievable because every press has a different component, product mix keep on changing, so.
Correct, sir. Got it. And sir, my second question is, sir, how are things shaping up with the new clients such as M&M as they are growing little faster than the peers?
Yeah, we are
Which one?
getting new business. Anuj will speak, yeah.
Which customer?
M&M.
M&M.
Yeah, so
Mahindra.
I was with Mahindra about, I think last week I think last Tuesday, to meet their corporate procurement officers. We are increasing our foothold in Mahindra, especially from our sealing division for heat shields. It will become a good, decent double-digit customer for us within the next couple of years. So we're very, very positive. We're getting good business from Mahindra.
Yeah, we already in hand, but the vehicle, whenever some programs are coming in third quarter, some program are effective from next year. So give me one year more. I will show you good growth in this.
Yeah.
Okay. Got it, sir. Thank you so much, sir.
Thank you.
Thank you. Participants, to ask question, please press star and one. The next question is from the line of Kushal Shroff from KS Broking. Please go ahead.
Hello.
Hello.
Yes, sorry, I am late for the call if I am repeating it. Is there more order pipeline visibility in the forging and heat shields businesses considering your FY27 growth targets of 500 crore and 700 crores respectively?
Yes, it is there. Please give me a couple of months. We'll come out with a new order achievement. Give me a couple of months for that. We'll come out. It is a pipeline, is there. It is in pipeline.
Okay.
Some already come, but I want to announce a decent order book. I don't want to announce small. So please wait for a couple of months.
Fair enough. I also have one more follow-up question. Given the slowdown in European demand for the forgings businesses, are there new geographies or customer segments being targeted to offset this impact?
No, sir. There is no slowdown of because BMW happened. Now it's on track. There is no slowdown from JCB, JLR. BMW is on track. Plus, we are adding more parts. So, sorry, I don't foresee any export demand coming from forging division. You will see a better figure in future quarters.
Okay. Thank you.
Thank you.
Thank you. A reminder to the participants, please press star and one to ask a question. The next question is from the line of Prisha Rathi from NM Securities. Please go ahead.
Hello.
Yeah, Prisha. Hello.
Yeah.
Yes. Thank you for the opportunity. I have just one question. So, in our forging division, revenue remains flattish at 75 crore due to muted European demands. What specific factors are impacting the European market, and how do you see recovery timelines?
Ma'am, this flattish growth, I told you we lost order of 2 to 3 crore due to the press breakdown, number one. Number two, BMW schedule, which came down heavily because of the excess stock with them, plus demand coming down, has now been recovered. And new part numbers are being added in the third, fourth quarter. So I don't see this quarter. Wait for the next quarter. You will see a growth in the top line and this export business also in future quarters. Very temporary phase. It's over now, man.
Okay. Thank you. This is helpful. Thank you, sir, and all the best.
Thank you, ma'am.
Thank you. Participants, to ask questions, please press star and one. The next question is from the line of Yug Modi from EP Capital. Please go ahead.
Hello. Yes, sir. Am I audible?
Yeah, you're audible.
Yeah. Sir, I just have two questions. The Indian automotive industry saw 5.1% volume decline in Q1 FY23. Yet you maintained a stable revenue. So do you expect demand to how do you expect the demand to evolve in the second half of the year, especially in two-wheelers and PVs and CVs?
So we expect that demand to be improved a little bit because of festive number one, because a lot of inventories were held by the customers, and which is now, I think, coming down. And now they again, we can see the better schedules from the OE customers at this moment. That's why I'm saying that this quarter should be good for the PV segment and two-wheeler because of the good monsoon, etc., and the festive of Concall, etc., coming. You know that all the festivals are coming, and demand is going to be there for that, little better demand. Thirdly, CV, I think from 1st July or 1st June, they have started the AC cabin, and that has little bit old inventory lying with them. They are trying to push that, and with the new norms coming in force, a little bit confusion is there, and I think people are working on that. It will improve in a couple of months, definitely. We are expecting the CV segment also. Hello?
Yes, sir.
Hello?
Yes, thank you, sir. So that answers my question, sir.
Thank you.
Thank you, sir.
Thank you.
That's all from my side.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to the management for closing comments.
Well, thank you so much for attending the call. As mentioned to you that, we have had a muted start to the year, but it'll get better as the next quarters come into play with the festive demand around the corner and an early Diwali. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Talbros Automotive Components Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.